Unless you've been on Mars for the last month, you'll have noticed that Bitcoin and friends have been crashing pretty hard. The markets are down, sentiment is negative, and $40,000 has turned into a price to hope for instead of something to be scared of. The one good thing about this moment is that if you've been waiting to buy the dip has definitely arrived. ARK Invest isn't passing up on the opportunity, and they've scooped up tens of millions of dollars worth of discounted BTC, while Jack Dorsey is launching a new initiative to help more institutions get into Bitcoin. And then there's the biggest story of the week. China is kicking Bitcoin miners out of the country. Even though this sudden move is crashing the markets for now, in just a second, we'll explain why the China mining ban is actually super bullish for Bitcoin in the long run. Time to get your bull on, because we've got all of these stories and much more in this week's Exodus Crypto News. Welcome back, everyone. We've teed up a lightning round of news highlights for you this week, so hang on.
Ludicrous speed, go!
If you can, hit those like and subscribe buttons. A few days ago on June 22nd, BTC dropped to $28,800 before quickly recovering to $32,000. As of now, we're still hanging out right around that $32,000 mark after a week of chop, and hopefully, fingers crossed, we're on our way back to 40K. Most people blame China's mining ban for sparking this unusually large dip. Now, that could be the main reason, or maybe it's just the crypto markets doing their thing. Whatever the case, at this point, the real question is whether the selling is finally over. Some analysts have claimed that breaking through $34,500 means that we're in a confirmed uptrend, and on-chain indicates that more Bitcoin is being withdrawn from exchanges than is being deposited. Usually that indicates that the selling pressure is about to let up and better prices are on the horizon. We can all grab the popcorn and hope that that's the case. It looks like China has really and truly banned Bitcoin mining. This isn't just political posturing or some PR stunt that everyone is going to forget about in the next month. This is the real deal. And one way we can tell for sure is by looking at Bitcoin's hash rate, which is currently down by about 50%. The only way that that could happen is if a bunch of miners all went offline at the same time. The drop in hash rate and prices hurts right now, but trust us, long-term, the China mining ban is actually insanely bullish for Bitcoin. For years, the crypto community has speculated that the Chinese government could force all of the Bitcoin miners to perform a 51% attack on the network. Since the majority of all Bitcoin mining takes place in China, or used to take place in China, this was always a possibility. Well, we don't have to worry about that anymore. And as the miners leave China, they're moving all over the world, which further decentralizes the network. That's great news for Bitcoin, as the world's most decentralized cryptocurrency is about to get even more secure. ARK is one investment fund that isn't worried about the Bitcoin crash. In fact, the ARK Next Generation Internet ETF used this dip to buy another 1,046,002 shares of GBTC, or about $29 million worth of Bitcoin. And that makes Bitcoin the investment fund's 7th largest holding, topped only by popular internet names like Shopify and Twitter. That's not all though. The ARK Innovation Fund did one better and bought 214,000 Coinbase shares worth about $50 million at the time of purchase. Cathie Wood and the entire ARK team have taken a really strong position on Bitcoin, and we think it's going to pay off for them in the years to come. Maybe the era of the dog isn't over just yet. Having a look at the charts, we can see that Dogecoin went up more than 20% in the last 24 hours, even though more popular coins like Bitcoin and Ethereum are only up about 4%. Of course, there's been a slight retrace since I recorded this. Could this be the beginning of another big run for the Doge, or is it going to fizzle out in the next few days? Let us know what you think in the comments below. You've heard it before and you'll hear it again. Not your keys, not your crypto. Well, a lot of people have learned that the hard way this week. Stakehound, the second largest Ethereum staking provider, lost access to, get this, 38,178 ETH that were staked on the ETH 2.0 beacon chain. It's still unclear if Stakehound's client will get compensated for the loss, as the missing Ethereum is worth about $75 million. And that's no chump change, but compared to our next story, it's only a drop in the bucket. A few days ago, two South African gentlemen eloped with $3.6 billion worth of their clients' Bitcoin. The duo were running a sort of Bitcoin investment fund that promised a high rate of return for minimal risk. That's what the marketing material said anyways. What the brochure failed to mention is that the founders were planning to take everyone's Bitcoin and disappear into the sunset. So don't leave your crypto on a third-party platform. Use a non-custodial wallet like Exodus, or buy a Trezor hardware wallet. If you don't have the keys to your crypto, well then who does? Crypto and baseball? Well, do they mix? Move over, apple pie, because according to Sam Bankman-Fried, the CEO of crypto derivatives exchange FTX, they do. FTX has become an official sponsor of Major League Baseball, and the FTX logo is going to be displayed prominently on the uniform of all Major League umpires. The deal is set to last for 5 years and could lead to all sorts of other marketing collaborations. Congrats to FTX on pulling this off. The better they do, the better everyone in crypto does. The Swiss company Digital Assets AG is launching 55 tokenized stocks on the Solana blockchain, including popular names like Google, Facebook, Tesla, and Netflix. The STOs won't be available to American investors, unfortunately, but Europeans will be able to buy the STOs on the FTX exchange and then transfer them to a Solana wallet or trade them on Serum, Solana's decentralized exchange. Now, this is an exciting first step toward a future where all securities will trade on the blockchain. Come on, jump in the pool, the more the merrier. Where are you at? The price action is meh, but the outlook is bullish for the near and long-term future. Plant your flag in the comments below, and thanks for watching, everyone. Make sure to hit those like and subscribe buttons, and until next time, hold on.